When you're using indicators, most indicators show you the direction of the market, i.e. whether the market is falling or whether the market is increasing. Moving averages, when they cross, can determine when you've got a buying or a selling trade setting up. Another indicator which I'm going to introduce you to now is called the ADX, and what the ADX does is it measures that there is direction in the market as opposed to just sideways, and this can be used in conjunction with other indicators. For example, if you are trading an RSI or a stochastic, and when you want the market to buy when the RSI crosses above 30, you can add an ADX in, the average directional index, which I'm going to show you in a moment, to give you the ability to see if the market is actually moving or if it's still remaining sideways. Let me show you what I mean. So we click here, we type ADX, and we want, there's three lines on here, we want the white one which is the ADX line, is the most important one. So I'm going to just make that a bit thicker. I'm going to grey these out a little bit so they actually don't show and appear so much, and click apply. And as you can see, okay, we have got the other greyed out lines, but when the market is in a sideways condition here, the ADX line is usually low below the 25 level. Okay, when you then get a sudden run of movement in one direction or another, the ADX line takes off. So it's not measuring buying or selling or up or down, it's measuring that the market movement is there either way. For example, here, as you can see in a moment, we'll look for one here when the market was actually moving up, we get that movement up. When the market moves down, we still get that movement up on the ADX. So the ADX measures that there is movement, not necessarily in one direction or the other. It just shows you there is movement. You can use the ADX in conjunction with other indicators to give you a little bit more clarity. So let me show you how to build something. Let's look at using an RSI. So let's delete that one and delete that one. So let's say, for example, when RSI 14 crosses above number 30, and so we're using the add function, and ADX 14, and the value is the ADX is above, and we'll put the number on here of, say, 25, so that we know that once it goes above that, we now start to see some direction move. Number 25. So we've actually now got two indicators in one algorithm. This is confirming the buy, and this is confirming that it's actually a market in a movement in one direction. So the action here would be to buy, and that's written the algorithm for the buy. Let's now do the sell. So the sell would be when the RSI crosses below here, for example, but we've actually got that momentum in the marketplace with the ADX confirming that. So this one here is when RSI crosses below number 70, because it's overbought, and ADX, and again the ADX, because it's not directional dependent, we can put ADX is more than 25. It doesn't matter, because we want it to be more than 25 for the buy and the sell, because it's not measuring the direction, it's just measuring that there is movement. It's a momentum indicator. The action is to sell. So that's actually written your buying and your selling condition using the RSI and the ADX, which is what this video is all about. Notice the ADX settings are the same on the buy and the sell.